Gold, taking the support precisely from the mentioned levels I have shared yesterday and today, 1972.5, 1975 zone. Again today it has gone towards the same zone and bounced back. Also, crude oil has also shown a recovery and it is now trading above 69 levels, but it is still hesitant to go past by 69, 69.2 zone. So now what to expect today from gold and crude oil with the US session and with the data coming in from the US with respect to the PPI, the inventories, the Fed interest rate projections, and the Chairman Powell's speech, how to take the advantage of this volatility. We will see with the help of charts and indicators. If you are new to the channel, do subscribe to the channel, do like, share and comment. This is the second update for the day. Stay tuned with the both of the updates. Let's start. First a look into gold, followed with crude oil. Watch till the and yes, today on my birthday, we have also launched the memberships here on the YouTube channel. And this is a support group where on one tier you will be part of the support members, and yes, you'll earn a badge, and the second group is where you get the priority reply to your trading related queries. So do join the memberships as well. Yes, a minimal contribution from your side is a great support from you all. Do join the membership. Let's start first to look into gold. Now if you look at gold, see, certainly what it has done here is the first bottom, the second peak at the same zone, same levels, 84 levels here. Greater resistance exists here at 84, 85, showing a reversal sign. This is the first red candle, and yes, it is taking support from the 20 period moving average, which is so far traded with the divergence. Thus it has to come out of this zone in order to take a direction. Right now it is trading sideways with a slight bearish move. Now if you look at the hourly charts here, see, lower highs are getting created and also lower lows are seen. Despite this breakout here, we can see this as a lower lows here. And yes, the support levels at 75 and 72.5 zone is very strong. Thus, when you see gold staying above 1984-85 zone, we can initiate a buying entry. We can expect 1991 zone as the next resistance zone, and beyond 1991 is where we can look forward to 95-96. Beyond that, certainly sky is the limit. It can continue to reverse and trade bullish from those levels. Look at a stochastic, this is overbought, and that is why we can see a red candle coming in here. While the MACD is trading with divergence, it is still on the buy side, it is still looking upwards. RSI trying to look downwards, trying to trade with slight bearish bias here. Coming to 2-hour, on the 2-hour chart, see, look at this handle here. This has formed a long tail. With that as support, we have seen it recovering. Now, preceding candle was a swing candle where the prices failed to stay bullish. Yes, it has come closer towards the 20 period moving average. Prices are trading with little divergence from the moving average. It has converged. Now once you see prices is staying above the moving average levels and the resistance zone at 84, 85, you can say it is trying to reverse, and we can look forward to again this zone and this zone here. Beyond 95, 96 is where the bulls will take over and the bullishness may prevail. Now see, too much of divergence of the prices or too much of divergence in the moving average calls for it to converge on the upside. The stochastic back to overbought. MACD has been trading with retracement here, and this is what it is. It is, see, the slope here and here. Look at the slope here and here. This is why I call it as a retracement, not a reversal. For a reversal, it has to be steep and it has to continue with the bullish bias. RSI looking downwards, coming to 3-hour. Likewise on the 3-hour charts here, yes, it has formed a support level here at 77, 76 zone. So, and yes, 75 indeed is the next support. 75, 72.5 indeed is a greater support for gold for today. Below 72.5, we all know that it is going to hit towards 65, 67, and then further lows can be expected. Also, one must note that a candle with a longer tail suggests that the prices fail to stay bearish and it can recover on the upside. On the 3-hour charts, the possibility of a 20 period moving average achieving is strong, and this is also greater resistance here at 89.91. Stochastic on the rise here. The MACD has also been trading with divergence and bullishness, and this is also coming at a lower levels. It is divergent, so it may call for a further reversal, further rise. RSI is flat. Coming to 4-hour. Now look at 4-hour charts. If you divide or if you create this as a symmetrical formation, you will find one red, one green, one green, one red. and then the swing and the rise. So if it is bullish, it has to stay above 84, 85 zone, and after that certainly the bulls will take over towards on the upside. We may look forward for it to achieve this zone here at 94, 96 zone, very strong resistance, and if it stays above this zone is where the bulls will take over. We can see more bullishness there. But look at the moving averages crossing over here. The 50 and 100 period crossover is a sign of bearishness. If you look at the stochastic, this is rising. The MACD here has crossed over at the bottom, trying to diverge two greener candles. It can possibly continue to retrace a little with a little bullish momentum, or you can say moderate bearish momentum, such that it can continue to diverge and trade bullish. RSI is flat near to bottom. Coming to the daily. Now, before we look into the daily charts, if you want to learn this art of trading, you can join my 28th mentorship batch. The dates are announced. Be a part of it. Reserve your seats now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can visit my page, my platform, www.forexfunda.com. This has much more than what a trader requires for trading decisions, be it the economic calendar, be it the data, be it the availability of expert, where you can directly call and consult with me. And yes, you can also be part of my webinar series, where we conduct every Sunday a webinar where we discuss the review of the market for the coming week. Also, I take up your live questions there, and yes, you can consult as well. So do register for the webinar. If you want to join as per the Signals channel on Telegram, reach out to me. Now look at the daily charts here. See what it has done. Lower lows are created here. Now it has almost stayed flat. Once it stays above 84, 85, chances for it to create lower highs, or in fact once it breaks past the yesterday's high, the chances for it to hit towards the 20 period moving average will increase, which is right now sitting at around 2010 levels. Remember, it is only to be treated for a reversal. Once gold stays above 2010 levels, you can say that the prices are reversing and we can expect further. Also notice, see lower lows there and lower highs there. The highs of this channel somewhere here at around 2010, 2020, and a reversal, complete reversal confirmation is about 2035, 2040. See, these are markets, anything and everything is possible. So yes, a complete reversal levels I have mentioned, it is only about 2035, 40. Now look, moving averages are still bullish. They have started to converge, but are still layered one over other. The stochastic is extremely oversold, and if it stayed overbought for a while, it can continue to remain oversold here for a while as well. But I expect it to recover a bit. Look at MACD. The MACD here traded with divergence. It is creating good waves. It has hit a bottom. See, whenever the candle size peaks here, it always tries to converge. Last multiple times we have seen on the daily charts. And here as well, it has seen it has hit at the top here. So possibility of a conversion exists from the current levels. RSI has hit a comfortable zone. It has come out of the overbought levels. Considering this, I will recommend you to buy. See, remember, today probably we may see swings. There are 3 to 4 swing events which can be expected. Thus, you have to trade with the stop loss and the trailing stop loss. I will recommend you to buy here at 84, 85 levels and expect it to hit or move towards 89, 91 zone as the first resistance zone. And once it stays above this, you can look forward to the next resistance zone at 94, 96. Staying above 96 is where more bullish momentum will gather. 2000, 2002, and 2002 is the milestone. If it breaks past by, you can look forward to 2010 level. So you have to keep trailing, you have to keep pushing your stop losses on the upside. On the downside, I will recommend you to sell here at 1974, 76 levels you can sell, but then you have to be very alert towards 1975, 72.5 zone. Very strong support here exists at 72.5, 75 zone. Only thing is, if you see the price is staying below 1972.5 levels, you can expect that we are looking forward to further bearishness, which may take the prices towards 1965, 67, and below 65, 67 is where the bears will take over. Take your trades accordingly. Now let's have a look at crude oil. Now see, crude oil forming the base here 68, 68.2. It has reversed. Now see, the prices are also divergent from the 20 period moving average. It has converged towards the 20 period moving average. The possibility is there that it can also try to move towards the 50 period moving average, which is right now sitting at around close to $70 levels. Stochastic here has come to overbought levels. while MACD here is at bottom trying to trade with divergence and looking upwards. And this could be the next wave because see, this is the lower levels from where oil tries to bounce back. RSI coming out of the oversold zone here on the 2 hour chart. See, it was trading with this wave. It is reversed. It has come to the resistance zone, staying above 69.2. We can look forward to 69.5, 69.6 levels, and beyond that, certainly we are looking forward to 70 plus levels. Yes, it can try to erase some of the losses what it has incurred yesterday, creating lower highs, possibly coming towards 70, 71 point zone, 71 zone. The stochastic is rising back to overbought zone here. The MACD has traded with bearishness. It is trying to converge. It has not yet crossed over. A crossover here may lead to the next bullish wave here, which can take it towards higher highs, which means in fact it can break beyond 72 as well. RSI coming out of the oversold levels. Coming to 3-hour chart, look at 3-hour charts here. Drop, retracement, and see the bullish candle is stronger. This means that it can strive to achieve further highs, which may take the prices towards 69.6 and in fact 70. In fact, we can see it erasing the losses from yesterday and creating lower highs here, moving towards 70, 71 zone. There is a possibility to it. The stochastic is rising here. MACD is traded with the bearish bias. It is trying to converge and crossover for the buying entry. RSI hitting the bottom, trying to bounce back. Coming to 4-hour chart. Likewise, on the 4-hour charts, lower lows are getting created, and if you draw a parallel to this, lower highs, which suggests that the prices might strive to achieve this zone here. Now this zone is little far above at 71, though it has still little opportunity for it to move towards gradually. Thus beyond 69.2 is where little further bullishness can be expected, where we can expect the price to move towards 69.6, 70, 70.5 and 71 levels as well. Yes, it can, if it can drop strongly, it can rise strongly as well. The stochastic rising from the oversold. MACD was trading bearish. It is trying to converge a bit. Let's see if it crosses over. This crossover means a lot for the oil here because this can completely reverse the trend. RSI coming out of the oversold zone. Coming to the daily chart. First, you should have a look at the daily chart. See, 68 levels were the levels from where the rally has started. It has formed a triple bottom at around 67 before the prices started to reverse. This is the first observation. Second observation here is, see, the yesterday's candle was a sharper bearish candle, and that has also come up after a little of retracement candles. Yes, now this zone is certainly the zone where we have to focus. Lower highs and lower lows suggest that there is a possibility for oil to gradually move towards 70-71 zone, if not today, possibly some point of time soon. Also, the third observation here is too much of divergence of the price from the 20 period moving average, which is right now sitting at around 73-74 zone. Thus, there is a possibility of a recovery from the current levels. Stochastic is looking downwards. MACD is still trading bearish, and it appears that this could be the bottom. From here, the conversion and crossover can be expected, which can pull the prices little up. RSI has also hit a. Considering this, I will recommend you to buy today oil at 69.2. Beyond 69.2, we can look forward to 69.5, 69.6, 70, 70.5 and 71. 71 is the greater resistance which it is going to face. If you see it is staying above 71, certainly the bulls will take over for 72 plus levels, which can completely reverse the prices. On the downside, a selling entry today I will recommend is only above below 68.2. If you see the prices staying below 68.2, sell oil. We are looking forward to 67.65, 67.2, and then below 67.2 the crash will begin. So take your positions accordingly. Do trade with the trailing stop loss. Like, share, subscribe and comment. Join my mentorship batch. Join my signals channel. Join the webinar series consultations group. And also, if you are not joining, just support the effort by becoming a member here on YouTube. This little support definitely means to me a lot. Thank you very much. See you again with the Asia and Europe session tomorrow. Do watch that update as well. Have a great profitable trading day ahead. Thank you.